PepsiCo reporting earlier this morning, beating on both the top and the bottom lines. It was helped out by strong international demand. And joining us right now to talk about what it says about the consumer is Sucharita Kodali, Forrester Research retail analyst. And Sucharita, looking at this, I mean, the good news is earnings beat on both the top and the bottom line. I guess the bad news, if you're looking for any of it, is that volumes were down. They were able to make up for it with price increases. But what does that say about the consumer?
Well, I think that this is really still a reflection of the challenges that consumers are facing with respect to inflation. The consumer confidence level is still relatively low. When you look at data from, for instance, the University of Michigan's consumer survey, really the level of consumer confidence is still at the levels that it was at the nadir of the pandemic. And that isn't a good thing. And what that means is that the shopper is just likely going to be pulling back in the year to come. Now, one of the interesting things about the PepsiCo numbers are that within their categories, there are, of course, snacks and beverages. Beverages is able to withstand a little bit more of those inflation effects. The consumer is paying more in that category, and you're seeing that reflected in the earnings numbers for that particular line item. But for snacks, it's not really at all, and that is where PepsiCo, of course, has to absorb some of those supply chain increases that may be driving some of those inflation numbers.
It has been a pretty tough market over the last year for some of these consumer goods companies. What is that simply inflation? If there's no signs of letting up, what does that mean over the next year?
Well, what we're seeing is that that inflation it's coming down in certain categories, and overall, where we are is at about 3.5%, which is still not at the magic number that the Fed wants to see. But the numbers are pretty wildly varied category by category. When you look at sectors like beverages still have a relatively high pricing power with shoppers. There are other categories, a lot of the perishable foods that the prices have come down, which is a good thing. But another sector which where prices are incredibly high is food away from home. And that's the restaurant sector in particular. And of course, the beverage area is highly penetrated in the restaurant sector, and inflation is still outpacing the overall industry in that sector, which grew tremendously through the pandemic and continues to grow now.
One of the things PepsiCo said is that it still sees 2024 organic revenue up at least 4%. I mean, that's pretty good news.
Yeah, I think that we're definitely, when you look at the revenue numbers for many of these packaged goods companies, their top line numbers are still pretty strong. They have a lot of ability often in subcategories where the prices are going up to pass some of those price increases on to shoppers. So that is absolutely not surprising. I think that the bigger question is really major questions around volume levels, because over time, if these CPG, these packaged goods companies lose their shoppers to private label and other substitutes, what happens is that it's much, much harder to reacquire those customers in 3 to 5 years.